Hello, friends. James Stevenson back with another episode of Who's Hating Hard on Tesla Today? Those of you who've been watching this series for a long time may be delighted to know that today's hater will once again be Brad Munchen. So today's episode will also be an episode of Dunkin on Munchen. I think we're up to part 4 in the rhyming Dunkin on Munchen series. I had to mispronounce Brad's name to make those rhyme, but who cares? It's probably a fake name anyway. There probably are no photos or videos of Brad Munchen online anywhere. If you're aware of them, let me know. I've never found any. So here's what Brad Munchen was hating hard on Tesla on July 22nd, tweeting more confirmation that U.S. inventories at Tesla in the U.S. are at new record highs. They'll need another 5 to 10% cut in prices at this pace, which would mark the 6th round of price cuts since January. Hard to believe this car maker has an $824 billion market cap, Brad tweeted, retweeting Steve Currents at Beagle Knights, who I've never heard of before, saying Tesla inventory check after 3 days, shocking Y and 3 increase. Let me just save you some time here and not read the rest of this tweet. It's garbage. Any source of information that you find online that says that it's Tesla's current inventory, it's garbage. Don't waste your time trying to make sense of whatever numbers randos have pulled from wherever they think they can get this information. Tesla does not publish inventory counts that are specific, right? So people are trying to piece together, hey, if I try to order a Tesla within this range from this location, here's how many it says are available. Well, those are not exact counts. So they're either going to be way too low or way too high, and then you're going to have to adjust for them, whatever, right? Don't bother with that inventory stuff. Look at the numbers Tesla is reporting. Tesla reported 16 days of sales in ending inventory. That's higher than it was a few years ago, yes. But Tesla has been ending the wave since a few years ago. So they've gone from an industry-leading 6 or 7 or 8 days of sales in ending inventory to still an industry-leading 16 days of sales in ending inventory. Find me another company doing better this year than that. The industry average is 50 days of sales in ending inventory, with some brands up around 90 days of sales in ending inventory. That is a lot of vehicles, friends. So follow Car Dealership Guy on Twitter if you want to know what the other brands' inventories are looking like. They have a much bigger inventory problem than Tesla has. Most of the vehicles that are in Tesla's ending inventory are simply being shipped to their buyers. So Tesla has to do a lot of overseas shipping. So there's still Teslas on the water heading to their destination or at a delivery center waiting for the buyer to come pick it up or what have you. And then Tesla also needs some vehicles as test drive vehicles. So that's what's going on. If you just read the numbers Tesla publishes and the commentary that they're providing, you'll be better informed than if you take Brad Munchen's advice for it. Okay, so I had to reply here, especially hard to believe. Remember, Brad ended his tweet, hard to believe this car maker has an $824 billion market cap. Especially hard to believe, I'd imagine, for anyone who bought $25 strike Tesla put options on January 6th this year. If you don't know why January 6th is an important date for Tesla investors, this is the lowest sale price there was on Tesla stock in the past 2 years. There hasn't been a better day to go long Tesla than January 6th. Long with call options, the opposite of put options, or with stock options. This was the day you wanted to buy Tesla. And in the screenshot here, what you see from January 6th of 2023 was Motorhead Brad Munchen admitting that he bought Tesla put options at a $25 strike. What does that mean? It means that by the beginning by the end of 2024, Brad needs Tesla stock to be trading at less than $25 per share in order for these put options to have any hope of being worth more than a penny each. And he paid a lot more than a penny each for them on January 6th of 2023 because Tesla had been sliding for a couple of months at that point and was around $106 a share, something like that. So to his credit, Matt Smith at MattChasmMatt replied, "What do you think EPS will be in 2023 and 2024?" Brad helpfully provided his expectations for Tesla earnings, saying he sees Tesla GAAP EPS in 2023 at $1.56 for the whole year. $1.56 worth of GAAP earnings per share. I don't have any forecasts beyond 2023 as there's nothing to forecast. No new models or full model changes forecast. Okay, so we'll just say Brad assumes the same earnings will happen in 2024 as well, the same $1.56. I replied the following day, January 7th, "Just a couple of weeks ago, you said Tesla 2023 earnings would be negative." He did on George Noble's podcast in late December, just a couple of weeks before sending this tweet. He said he thought Tesla's 2023 earnings would be negative. So I said, if you keep raising your 2023 EPS projections at this rate, at a rate of more than $1.50 every few weeks, you'll have the highest target on Twitter by Easter. Nobody has raised their EPS estimate for Tesla more than Brad Munchen has recently. So what do we see here? Well, here's the helpful stock chart showing you January 6th. So here's where Tesla stock was on that day. Hasn't gone down since then. Not even once. There hasn't even been a day when Tesla traded lower since the day Brad bought his $25 put options, which is a short position. It's not a naked short position, but it is short via put options. And yeah, here's where the stock is today, up around $260. More than double where it was the day Brad bought his short position. So I ended off with this GIF here. What's that like? What's what like? Well, here's the EPS line for non-GAAP earnings. This is the one Wall Street cares about, the one that Brad was providing his estimate on. Remember, he said $1.56. So what do you get if you add 85 cents to 91 cents? Well, 80 cents and 90 cents would be $1.70 by my math, and then you throw in another 6 cents, $1.76. So Tesla, over the first half of 2023, has already beaten Brad Munchen's full year EPS forecast by 20 cents with 2 quarters left to go in the year. And he replied, January 2025 expiration on those put options. I'm not too worried, to which I could only laugh and drop this GIF. This is called doubling down. He's not backing away from his stupid put option purchase that he's way down. Huge mark-to-market loss on however many of those puts Brad bought. He didn't say how many. This is called doubling down. Yeah. And he has been doubling down. He has been buying more of those put options since. Let's see how it works out for him. It's a bold strategy, Cotton. Let's see how it works out for him. And I will outro, and after checking in with Loki, say, if you enjoyed today's video, click the like button. If you're not subscribed to my channel already, why not go ahead and subscribe to my channel? You can do that on Twitter for 69 cents a week, on Patreon for $4.20 per month, or right here on YouTube. You can join, as my executive producers Kathy Kitchler and Rebellionaire.com did, and I'll see you in the next one.